Price pushes into higher structure, but it cannot stay. The April 14th U.S. session forms inside the February 4th U.S. session box. The downside frame begins at the February 4th U.S. upper boundary. That is where the position forms. The failure line sits half a session above the April 14th U.S. box. The completion line sits lower, at the March 13th Asia session midpoint. The ratio comes out to 2.86. You see the top. You take it there. The reaction is immediate. It starts to work. Then it hesitates. Now the pressure begins. You are right on location. But price still pushes back slightly. It tests your tolerance before it moves. That is the whole point of this session. The top boundary is correct. The downside is open. But the move does not drop cleanly at once. Then distance appears. Price moves down. Now the frame starts to open. Now the position finally breathes. It approaches the March 13th Asia midpoint. That is where the move should complete. That is where expansion begins to slow. Now you must decide. The reaction from the February 4th upper boundary was real. The failure line stayed controlled. The downside stretched far enough to make the frame worth holding, but only after pressure. That is why this one works for retention. You see the rejection. You think it is easy. Then it tests you first. The ratio is there. 2.86. The structure is there. February 4th, upper boundary above. March 13th Asia midpoint below. But the real problem is not direction. It is whether you can stay inside the move while it still feels wrong. Execution conditions remain in transition.